Hey everybody, welcome back to the channel. I'm doing another video on a super investor, and this one is Li Lu, who runs Himalaya Capital. He is known as the Warren Buffett of China. In fact, I was just watching a video from Monish Pabrai, and I don't know how accurate this is, but it came from Monish, so I'll go with it that that's true. While Li Lu was in college, he literally would, get money at the beginning of the semester to pay for that semester, but there would be a float of maybe 4 or 5 months before he had to pay some of that money back. He would invest that money, and he actually grew it to be $1 million during the time he went to school, which really blows my mind. That he was able to do that. I've never verified if that's true or not, but I'll take it for what it's worth since it came from Monish. But he's just an incredible investor. He manages a few $billions, so it's not a small portfolio by any means. And he made a couple of big moves in his portfolio this past quarter, which ended in June 30th, 2022. Now, what we're going to be taking a look at today is his 13F filing. So those are stocks at our American Stock Exchange. I'm not looking at other stocks that he owns in other exchanges, maybe like, for example, like the European exchange or Hong Kong exchange, for example. These are just the 13F filings. Now, I did quickly look on Ticker Terminal, and there were no other changes that I saw that were other than his 13F filing that we'll talk about today. So I just want to mention that real quick. So let's just jump right into this thing. And the stock he sold during the quarter was Meta. He completely sold out of Meta Platforms, ticker symbol META. And I've had several people reach out to me asking me, what are my thoughts on him selling out of Meta Platforms? Well, before I get into that, let's talk about the stock that he added, and he also bought new, and they're actually kind of the same company. So what he added to during the quarter was Alphabet, ticker symbol GOOG. Now, he did buy the other Google ticker symbol GOOGL. So again, same company, different ticker symbols there, but he just added to his Google position. And so Google right now is roughly about 15% of his portfolio if you add in all the rest of the stocks that he owns, between 10 and 15% in total. So he basically sold out of Meta Platforms, and then he kind of moved that money or part of that money into Google. So I think that that's something important to consider when we talk about Meta Platforms. So, Meta Platforms, it's interesting to look at Li Lu because he bought Meta Platforms in the fourth quarter of 2021. And that is pretty unique because that is when Zuckerberg came out and announced that they were pivoting to the metaverse. And that's when really the stock started crashing or collapsing at that time. If I remember correctly, the stock was trading around like $370 a share. It quickly dropped all the way below $300 a share. And then, beginning of this year, they warned about, revenue dropping, basically going down between 3 and 11% growth. Historically, the last, several years on a CAGR basis, they've been in the, 30% plus range. So that was a huge drop. So the stock dropped even more. So if we dig into Meta Platforms and we talk about the negatives with that company right now, there's a few different things. The biggest thing that stands out to me is the whole metaverse. We have no idea how much it's going to cost. First off, right? It's going to cost billions and billions of dollars, and Meta Platforms right now is taking money from their legacy businesses, like, for example, Instagram and Facebook platforms, and they're taking that free cash flow and they're putting into their R&D expenses, which is reducing their profit overall. And because of that, they're taking all the hits on the expense right now to hopefully have, revenue and maybe less expense in the future. But the CapEx piece, so capital expenditures, is going to cost billions and billions of dollars, but nobody knows exactly what that's going to be. Is that 50 billion? Is that 100 billion? We have no idea. And another piece of that, is it going to work, right? Obviously Meta Platforms has been, with the Reality Labs division, been in Oculus and other things. So they've been in virtual reality, but the metaverse is a whole different animal. And I do think that is the future, and where some company is going to be able to reap those rewards. and why not Meta Platforms? But on the same side, they're spending a ton of money now, and there's a lot of what ifs going on. And I really feel that Meta Platforms and Intel are kind of going through similar things, completely different industries. But if you look at Intel, for example, they obviously make processing chips, and their processing chip segment of their business has been hurting. They still have a really good free cash flow with their legacy businesses, but it is going down with AMD and NVIDIA, AMD specifically, really eating into their space. That is hurting the company. So they're pivoting, just like Meta Platforms is, and they're trying to build some foundry segment of their business. And again, that's going to cost a lot of money too. So there's a lot of like high risk, high reward type play. Same thing with Meta Platforms. Meta Platforms, the only two segments of their business that make any money is Instagram and Facebook. In fact, they make a lot of money. Their operating margins just on those two segments of their business is 39%, according to their last 10Q. But their operating margins have been going down. If you go back, I want to say, I'm doing top of my head, I think it's the second quarter of 2020, their operating margins were in the low 40s, like 41, 42% for the entire company. Right now, it's at 29% as of this last quarter. That is a massive drop. And I expect that to continue to drop. And I don't know where that's eventually going to fall. I don't know if that's 20 or 25%, but it's because of all the R&D expenses that they're acquiring or basically expensing in order to go towards the metaverse, along with all the money they're spending on CapEx as well. So they're kind of getting a hit two different ways there. And is it going to work? We just don't know at this point. But their legacy businesses are still profitable, and they're very, very profitable on that standpoint. But there's a lot of concern there, and just like there's concern with Meta, there's concern with Intel, right? But I think it always goes back to who's leading the company. Zuckerberg is leading Meta Platforms, Gelsinger is leading Intel, and if the management can execute correctly on what their plan is, it's going to work out. But those are just kind of the gambles or the bets that we have as shareholders. And obviously, Li Lu looked at the situation, and back in the fourth quarter, he thought, maybe this is. I'm guessing. I'm speculating. I haven't heard him say anything, but maybe he thought this might be a good opportunity, even with the metaverse. But something triggered him to say, okay, I got to get out now. Maybe it's because operating margins are going to continue to decrease, and maybe, the KPIs and stuff within Facebook, within Meta Platforms have been going down quarter over quarter, or maybe that's not where he wants to be. Or simply, he looks at Google, he looks at Alphabet and says, you know what, that company is on the uptrend. Meta Platforms was just too much risk, and their legacy business is hurting as far as still profitable, but is going down on a operating margins profitability each single quarter, and it's eating away at the total business because they got to put it into the metaverse. So that's kind of interesting. I personally really like both companies in different ways. I think Alphabet has an incredible business. I mean, the YouTube platform that you guys are watching today, I think, is the best business model that is out there, period. If you think about it, YouTube, Google doesn't have to make any content. They just have this platform that's sitting there, and they have all these content creators like myself that goes on there and actually post content, and then they get to take half the money. So Google takes half the ad revenue, us content creators get the other half, and all well is good, I guess. But it's just a beautiful business model. And if you think about it too, I mean, YouTube, obviously you can pay for YouTube if you want, but a lot of YouTube that people watch, including this, is free. You don't have to pay at all to get on just watch YouTube videos, unless you subscribe to some of the YouTube things that are out there. But in general, you don't have to pay. Where streaming, whether you're doing Netflix or maybe going through Paramount, or going through Warner Brothers, going through Disney, you have to pay for that. YouTube is free, which is fantastic for the viewer, and then us content creators and Google can make money off the ad revenue as well. So there's a lot going on here, but I'm not crazy surprised, just because Meta Platforms was a smaller position in his portfolio. So it's not like he just made it a 10% position right away. It seemed like he was just kind of treading lightly, put some money into it, and just kind of waited to see what was going to happen. And there's something that triggered him that he did not like, and then kind of pulled out from there. And my assumption would be that it's going to be a tough year for Meta Platforms, especially on the advertising side. And it's interesting with Alphabet, even though the advertising has been down across the board, across a lot of different companies, they still beat estimates on advertising revenue, which is absolutely incredible. And I think with Google too, they're one of those companies that can be long-term compounder, where they can spin off different segments of their business. For example, they have the Google phone. Obviously, they have the Google browsers, but there's other things I think they can spin off or do within Google that we may not know about now. Like, for example, Disney, right? They spin off Disney Plus because of all the legacy content that they have. And then they can still create. I think Google is that type of company. They're a spawner, I guess is what I'm trying to say. They're not to say that Meta Platform is not, but if you look at Meta Platform, typically the stuff they had, Zuckerberg went out and bought. He created Facebook, but Instagram, WhatsApp, Messenger, those are all segments of the business he went out and bought. And that's not necessarily a bad thing. That's how Microsoft has grown over time. But Google is just a different animal. I think they're just a natural spawner. So yeah, interesting. I'd love to hear from you guys. Why do you think he sold Google, or sold Meta Platforms to buy Google? Now let's talk about what's in his portfolio right now. Again, we're only talking about the 13F filings, the positions that are in his 13F filing. And so those will be on the American Stock Exchange. His biggest position right now, according to his 13Fs, is Micron, ticker symbol MU. And there's a lot of debate whether he was going to sell or keep. There's a lot of super investors, value investors that are in Micron, including myself. And, Mohnish Pabrai didn't really do much with this position. Li Lu just kind of held. And but we've seen other, value investors, say like a David Tepper, for example, kind of reduce. I want to say Seth Klarman did as well. So, just kind of seeing a different, trend from one value investor to another. But that was interesting to see because they did reduce their, guidance for this year, and chip makers and semiconductors in general just are not having a great time. But they obviously must be still bullish going on to the future. So they still held, or at least, Li Lu still held there. Second biggest is Bank of America, BAC. Third is Google, ticker symbol GOOG. That's what he added during this quarter. He still holds Berkshire Hathaway. He holds Apple, AAPL, and then he holds the other Alphabet ticker symbol, which is GOOGL, and that was a new one for this quarter overall. So, interesting because Li Lu made a lot of his money on smaller companies, maybe not as well-known companies in the past, but as this portfolio gets bigger and bigger and bigger, and you're maintaining or trying to manage a portfolio of billions of dollars, it gets more difficult to invest overall because there's a lot of stipulations on how much stock you can hold without doing extra reporting. So unfortunately, it kind of forces them to buy bigger positions just in general. So we'll kind of see how Li Lu does going forward, but I still think he's a phenomenal investor. And it's interesting to see him add Google and then sell Meta Platforms overall. So thank you guys so much for watching. These are just my opinions on this subject. And if there's another super investor that you want me to do a video on, drop it down below. I plan to do one on Phil Town. That Phil Town is one that I closely follow. I did his investment courses a couple of years ago. I highly respect him. I just looked today and I did not see his filing out there. So rest be assured, I will put a video out once that filing comes out. Overall, and I did hear through the grapevine that he did buy Google himself. So that will be kind of a, I don't know, pull the curtain away type before we get to that video. And also plan to do one on Dave Tepper as well. So if there's any other ones, drop them down below. Thank you so much for watching. I'll catch you on the other side. Take care and God bless.